Welcome traders, hope everyone's well. This is going to be a follow-up video on our order flow playlist, and this is going to be specifically about treasuries, as more people have been wanting some content regarding treasury markets and how that differs from the likes of ES. It's a much thicker and smoother market, easier to learn order flow. So in this video we're specifically going to cover absorption and backticking on the 10-year. Okay, so before we jump into the video, this is a recording. Now, I didn't have my screen recording at the time, but the key level that we're going to note here is 16s. Okay, and we're going to watch the order flow come into this level and how it changes and what you need to look for to determine absorption and then backticking. Okay, so I'm going to explain what you're seeing on the charts here. So the far right is ZF, we have the 5-year, in the middle we have the 10-year, and in the far left here we have the 30-year bond. Okay, now just for context, I have market profile on the 10-year up the top left, and at the bottom left I have a 4-tick range chart with VWAP and some standard deviation bands, as well as cumulative delta. Okay, so that's what you're seeing. This is a recording, as I didn't have it carried out live, so this is a fantastic demonstration for the absorption and backticking. So we're going to press play, and you notice this is going to be a relatively longer video. So notice that we're seeing the market is lifting into the offer, and then you're seeing the bid being reloaded. Okay, this is happening in the 5-year as well. The 30 years is just not as thick, but this is, you can see this clear as day on the 10-year and the 5-year. So notice they're hitting into the bid, and this is then continually reloading. Okay, and ultimately what you want to be seeing is there's two-way action. This is to be used for you to get into trades and get out of trades. So when the market is lifting in to this price, you can see that it's continually being reloaded right now. Okay, the same on the 5-year. And ultimately there has also been a step in the profile. So for more context, we'll pause this for a second. For more context as to where we were in the day, this was NFP come out. NFP, essentially we had a huge stop run to the high, happened in seconds, and then we've dropped right back down. This is roughly where the week began, and you can see the market has went down to 9.5s, and then we've essentially then traded out this volume here, and 16s is essentially the resistance point and the highs of where the market has been trading. Okay, specifically in the 10-year, because there's much more volume carried out. You can see that it's also the case in the 30-year, with not as much volume being carried out on the 5s. Okay, so ultimately there's two main trade ideas that's going to happen here. Is when you're getting up to a step in the profile, this is going to be a pressure point. So if the market breaks this, there will be some stops triggered. Okay, and ultimately when stops are triggered, the next price will be taken. Now, because we have really traded up and we've really traded out this level, you can see this where I'm drawing this here. The other idea is going to be that if we see a lot of absorption up at these levels, and then ultimately looking to fade this back into the sort of mean, or the main traded price, roughly into your sort of 13.5, 14s, 13s area, just depending on how long you want to be holding the trade. Okay, so we'll watch this play out, and we'll fast forward it a little second, but you can notice that sellers have essentially hit into the bid, it ticked down, it's instantly been lifted back, and then buyers are still reloading into this price. Okay, then they've then ticked across, and you can see there's been 650 pulled on there. So you want to notice that when the price is going into the next level, right? How many of these orders are being pulled, okay? Because the last thing you want to be doing to fade this right now is if you're selling into this, okay, and these orders are then pulling away, it means that there is not much size behind them. So right now there's still 2,000 been traded in here, and then they're continually reloading on the bid. Okay, and notice here there's 315, and if they do take this price, then we will ultimately tick up. Okay, notice now that there's some more selling that's come in, more reloading, but then 1700 has been pulled. There was 4k there prior, and only 2000 is traded, so only 2000 was pulled there. Okay, they're aggressively lifting into the offer right now. The same could be seen on the 5-year. Okay, they're still starting to absorb some at this level, but then the bid is still staying strong right now. Okay, so they've ticked down, and then instantly then some reloading is going on. So we're going to fast forward this because it continually takes up the next price. You can see from Delta at the bottom left here, there's still aggressive amounts of buying coming in. And if we look back, there was 5,000 that was on this price at one point. Okay, when prices actually got to here, you know, there's been tons that has been pulled, and yet there's still 7,000 on the bid. Okay, again, they've instantly taken that price and then straight away reloaded 2,000 into the next price. Okay, so right now this is not the time to be fading. Okay, you need to see sellers stepping in and holding price, and this is the key inflection point that we discussed. We're at the high on the profile. Okay, and if the market breaks 17s, then you do not want to be in this, because it's going to be stops triggered, and then it's ultimately going to look to target back to VWAP. So if we watch the 5-year, notice there's 3,000 been absorbed right now. Now in a second you will see the amount of absorption that happens in this, and this is going to be your key to the absorption and backticking that happens. But it has to be at your key flexion points, because this is a pressure point in the profile right now. Okay, if the market breaks 17s, we're going to see the stops triggered, and then ultimately a push back up into VWAP. So we have really traded out this area. So if we watch the amount of absorption happening at 16s, and if you notice the difference now is this has not been pulled. Okay, the 6k is staying strong, and note the 5-year, it's had 4,636 contracts absorbed at 7.5. Okay, and then they're trying to then downtick. The bid is still staying strong though. The 10-year is going to be your key for effectively taking down this whole market. And you'll notice this when this happens in the next couple of seconds or minutes, is this, when you see this play out, you can get in for an extremely tight stop, and then you would be out for your 2 to 3 ticks. Okay, we've got this playing at 1 times speed, so you're not missing a beat. So this is exactly like a live environment in the market. It's not sped up or slowed down. Okay, so sellers are starting to then sell into this price, okay, but the bid is still staying strong. We can still see more absorption at this level in the 5-year. Now the buyers really now start to lift in. Look at this, they've just hit 8,000 contracts, okay, into 16s. Okay, and then there's continual reloading. And bearing in mind, this is essentially now an iceberg that's happened. Okay, someone is just aggressively reloading here and taking all of the buying right now. 9,000 contracts traded, the 5-year is ticked up. So what you want to be seeing there is this hold, or when they hit back into that, they try and reclaim 7.25. The 30-year sometimes can give you an indication if it's going first, but it's not as relevant in this actual position. 11.5 contracts now traded. Continue reloading. This is like the mother of all icebergs right now. Okay, so we'll pause and note that the 5-year has now just taken that price and now hitting in to 7.25. Okay, and at the same time, now this is the key where you need to be starting to really pay attention. Okay, 12,100 contracts have lifted into 16s. Okay, and they've not been able to crack that price. They've done the same on the 5-year, not as much volume just because it's not as a liquid market. And now instantly the market is then taken all of the selling, okay, and then instantly reloaded on the offer 1,000. Okay, so when you see this, that they've not only absorbed 12,100 contracts in the offer, they've then taken the next price and then instantly reloaded and refreshed on the offer. Okay, so after you see this, you need to be thinking to yourself, right, if this gets taken out, okay, I no longer want to be in this trade. So your stop here, you can comfortably have this above 17.5. Okay, so if you're looking to get in here, you can have a 3-tick stop. Okay, so we'll play this and notice here they're reloading again. Now it's now 4k, and then they're hitting into this. There's just been 6k pulled from this price. Okay, and notice when this hits into this, the amount of contracts that are going to pull down here, 4,000 has just magically disappeared. So they've just taken that and then instant reloading here. Okay, now you're going to have an uptick that happens, but you want to see that for staying strong. So they didn't even flinch, then it's then ticked down. Notice the continual pulling as you go down. You want to see 56 is traded in there, and there was 4,000. So pause that a little second, right? There was 5,000 contracts that was waiting at 14.5 to buy. Sellers have hit into that, and then literally in a split second, 4,000 has just disappeared. No longer traded, absolutely pulled, right? So if you got in here at your 15.5s after it gave you this clear sign that they could not crack, right? You're now a couple of ticks to the good, and you now need to be thinking to yourself, right, how far am I going to take this, and what is going to be the order flow and ultimately to get me out. Now you could be taking your 2 ticks. If you're hitting this with size, this is the thing with Treasuries, you could be in here for minimum, say 5 to 10 contracts, okay, for this trade. If you're trading any larger size, this trade is essentially going to be one of your nice painless ones where if you're timing it properly, you've essentially not had any form of max adverse excursion with this. It's not even went a tick against you. Okay, so we'll notice the order flow when this comes down into say 14s and 13s and a halves. Now, buyers, of course, are going to then start ticking up, as you can see, but you want to see the offer starting and continuing to reload, okay? Because the 16s is the key point. That should not be cracking for this. Notice the 30-year is still going. There's been 1200 pulled on the 30-year into this price. So the 5-year and the 10-year is ticked up. But they're still reloading here on the offer on the 10-year. And this is just essentially looking to be your mean reversion play. You could be targeting this back down into 13s if you so desired. Or you can take your painless few ticks. So they've just cracked that. Okay. We'll pause. The market ticked up, essentially another 1970 is traded, and now they're aggressively hitting into 14s. That was the level that essentially held the last little tick up back to 15 and a halves. So you want to see how this reacts when it gets, because if they take out this level here, and then there's more reloading, which they've just hit 3,189 contracts in here, and 1,245, it's instantly been reloaded. Okay, so this is the next key point. Now, if you wanted to be extremely on the safe side, this is not exactly ideal right now, where you're seeing a continual reloading on the bid. But then it's doing it across the board. You can see on the 30-year that they're aggressively hitting into 21s. And this is the time where you can be looking to get down to your 13s. Okay, and you need to be watching as to what the other markets are doing at the same time. Because 14s right now is being held. And this is the same order flow confirmation that you got to enter into your trade. And you can be using that to be on the safe side to ultimately exit. Because if they do take this level, you want to see how they react at 13 and a half, because there's 5,400 contracts here. Okay, so if they do crack 14s, how are they going to behave when they get to 13 and a half? $9,000 absorbed now. Note the selling that's coming in Delta. Okay, so the bid has then essentially stayed strong. We've ticked down and it's essentially not pulled. You want to see how aggressive sellers are going to be, but you could now just be taking, you know, your 3-4 ticks that you've got in. Personally, if it was for me, I would be moving my stop now so that I'm at least guaranteed to make some money on this specific trade. But it's a good sign that they're reloading here on the offer. And you want to see how the 30-year behaves. But there's still some buying pressure here at 14s. They're still willing to take this price. Okay. So I hope that we'll just quickly jump back to this, because this was just a recording. Okay, so the main summary for this is, in order for you to identify your key levels for absorbing, you can see clearly on the profile, right, that these levels from 16s, okay, down to 10 and a halves is where the most volume has been carried out for the day, okay? And if the market is to break out of these levels, there's going to be stop runs either side, okay? Now, we need to, it's our job as traders is to identify whereabouts are these large firms looking to get in, okay? And it's not very often you're going to see 12.1k contracts absorbed in the offer and then instantly hit in 8,210 and then reload on the offer, okay? Now, I think when I actually remember how this went out, this actually took out 13 and a halves and 13s. But to be on the cautious side, you there comfortably can be taking 3 to 4 ticks in the 10 year, and it was an absolutely painless trade. Okay, this is the key for the absorption and backticking, and it actually gave you confluence across the board where it was happening on the 5 year and on the 30 year. The 30 year is more gave you an idea to hold on to this specific trade, but this is the general concept. You need to pay attention to the pressure points. We're going to cover the pressure points in a separate video of the volume profile and how you put that into and how you implement that into the DOM, but we've covered parts of that in this video. Okay, but absorption and backticking is extremely easy to spot once you get proficient at the depth of market in treasuries. This is the reason why we're showing you this in treasuries, is because it happens across one tick. When you're going to the likes of ES, this is happening across, depending how thin the book is for the day, but this will be happening across probably 3 and 4 ticks. And then when you go to NQ, I mean, forget about it. You'll be probably 2 points. It's much harder to train the eye to spot that. Okay. So I hope this was beneficial. This is the first introduction we're going to start doing into treasuries. And the next parts we're going to cover is going to be the breakout trades and when stops are being triggered, and the different market conditions that you need to be paying attention to get you into good trades and keep you out of bad trades. Okay, I just want to give a shout out to all of our followers that are part of the coffee gang. I really appreciate your support. If you're new to the channel, if you can make sure and hit the like button and subscribe, it really helps out the channel a ton. And if you've got any questions, please leave a comment below. I will make sure and get back to you. Okay, but until the next video, hope everyone has a great day. Stay green. Okay, peace.